What's going on, people? Welcome to day 2 of the DaWedgeCamp videos. Now, I do apologise for not posting one yesterday. However, I was travelling. Well, I wasn't travelling yesterday, but I'm travelling today. I'm recording this off of my laptop, so if it looks a little bit different, do please bear with me. But I am, recording from Birmingham, which is a bit strange. But we are here today to talk to you about SMTs, which is the first confluence that we're going to be sort of looking at. So we're going to go through each individual confluence that I use for my specific model, how they work and why they work. Why is that? Hold on. We're still recording, aren't we? Yeah. Okay. Got rid of the bar. Anyway, so SMTs. What are SMTs? To put it simply, without needing to give you any more information than you need, SMTs are when two correlating indexes or pairs, when one of them takes a high or a low and the other one doesn't. That means there is a divergence in the market and therefore that is a protected low. Why? Why does that work? You don't need to know. I hardly know. Okay, the ins and outs of it don't matter, but how you spot it and how you look at it at face value to use it as a confluence to look at the charts is as follows. So we're going to remove all of the drawings. Oh, don't ask me that. We missed a gorgeous setup on here, by the way. Okay, so as you can see, this is Top Step. Now, this is the first time you're seeing Top Step, and I will get into that in a later episode, how to set up a funded account and stuff like that. But first, you guys need to know what you're doing. You guys need to, you can't go in and buy, Combine and stuff like that if you have no idea what's going on. So to make it simple for you, we will look for an SMT in the market. So you've got on the left, you've got micro NASDAQ, so that's the NQ, which I'll be referring to it as throughout the series. And then on the right, you've got micro S&P. This is the S&P 500, and this is trading it as an index, also known as MES and MNQ. So what are SMTs and how do we use them in our model? Well, how I use them, first part of any bias is looking at the previous leg, seeing if it made an SMT inside of a gap. Now, what is a gap? We'll get into this more in depth in a future video, but to put it simply, this candle right here that you're looking at, you've got the body of the candle, which is the thick bit, and then you've got the wick of the candle, which is the thin bit. A gap, also known as a fair value gap, is the space in between. It's a three candle pattern, and it, this light proper confuses me. It's where the market moves up quickly without rebalancing, and leaves this gap, which has an exposed body of a candle in between two wicks, is probably the best way I can put it. This means that price jumped too high, too fast without rebalancing, and naturally wants to come down to rebalance. As you can see here, it's very likely that fair value gaps get traded back into to continue a trend, because the way I use it in my model, if you already know about Fibonacci retracement tools, that's perfect, but a gap is very probable to have a reaction from it when there is also an aligning fib level. We'll get into this in its own in another video, but for now, all you need to know is there's gaps in the market, we can trade into them, and it's good for a pullback. So you get your confirmation that price is going up, we get a pullback into a gap, we respect the gap, and then even better, we inverse, which means the body of a candle completely closed through a gap, which means it was then disrespected. As you can see, price came up on this hourly candle at 5 a.m. this morning, disrespected this bearish gap, which means we are disrespecting bearish structure. So what do we then look for? A retap into a bullish gap, which it created, okay, which is also, I guarantee you, to a T. Nope, let me place it. That is the 68% extension. And then it proceeded to run. I mean, call me crazy, tell me this shit doesn't work, but I've seen it almost a year running, so it must be worth something. Anyway, SMTs, what the fuck am I talking about? Yes, so SMTs is where we'll draw up a little bit. So an SMT is as follows. Brush. So market is creating higher highs, and then proceeds to come down, take out the high, and then continue down. So this is the high, okay? Now on ES, an SMT would be as if we come down, don't take out that high, and then proceed to come down as well. So as you can see on here, on NQ, NQ took the high, and on ES, it didn't take the high. Now, that is an SMT. I will show you how we find it in the market in just a moment. Okay, so where are we? Where's an SMT? There's literally one right here, okay? So we're on the hourly time frame. As you can see, price came down. Price came down and created this low on both of the indexes, right? This is the same low as you can see on Top Step when you've got the two. As long as the bar is in the same place, the bar links. Oh fuck, we didn't. Oh, they're relative equal lows. Oh my god, I'm so stupid. Sorry, gang. Holy guacamole. Far out. Where's... Okay, here's a bearish SMT. Market came up, made these highs, right? Market came up, made these highs. We can then see ES traded up, didn't sweep this high, okay? Didn't sweep this high here. What am I doing? Give me an ellipse tool, please. Computer, give me a circle. So this is the high. ES came up, I don't know why I'm pointing, didn't sweep it. NQ, on the other hand, came up and swept the high, taking liquidity, but ES didn't. Therefore, we can draw a line from this high to this high, and then draw a line from this high to this high, right? If you want to, you can call it SMT. I've got a preset saved just so it's easier to see. And that is a divergence. And as you can see, we've started coming down from that. ES came down to these lows, NQ's come down a significant amount. So, yeah. But also, now, as you can see, down here, let's get rid of these lines, not to be confusing. You've got this low. And then what have you got on ES? Mark out the same low. So... grab this circle quick. That's this low and this low. Hopefully this makes it easier to see, or else I'm just doing this for no reason. But as you can see, ES has come down and swept this low, and on NASDAQ we are still trading above it, which means we are currently having a bullish SMT formed. Now, how do we use this in correlation with other stuff? Like the gaps I just said about before, I personally consider an SMT valid when it is either at highs and then starts disrespecting structure, or when it's at lows or in a gap, right? So say we're at all-time highs, NQ comes up, takes the high, ES doesn't, right? We then disrespect a 1 hour fair value gap and respect a bearish fair value gap. That means we are now in bearish structure, okay? Because we are disrespecting bullish gaps and we are respecting bearish gaps, which means we've flipped to the downside and we're likely to continue lower until we hit either some big liquidity, which can be data lows, session lows, hourly lows, 4 hour lows. By the way, lows are the low of a move. So this here, what's the best way to do this? Extend. No, do not extend. Okay, so we'll call this here, this is a leg, right? This is a leg. From this high to this low is a leg. This is a leg of movement. It's from the high to the low. Okay, so from the leg, we can see we had, which leg was I looking at? Here we are, I like legs. All right, stop it. We can see we had this bullish gap that got disrespected, okay? But then we disrespected it, came down to the lows. Sorry, I forgot where I was going with that. I feel so stupid. Sorry guys, it's been a long day of traveling, okay? But when we have a 1 hour gap, say here, so this is a premium 1 hour gap that we traded into during New York today, which was fucking annoying. Oh no, that was yesterday. That was yesterday. I know, because I missed it. Anyway, where are we? Let's mark out the same gap on ES. So we've got 2 gaps marked out at the bottom of a trading leg. Now, we get the fib tool from the low to the high. We can see NASDAQ was very close. Didn't quite take out the 68% extension. On ES, we did take out the 0.6 extension. So that's technically an SMT in itself. However, I like SMTs off of readily available lows. So you've got an SMT, NQ didn't come down and take out the level, ES did. But if we look at that on a deeper level, so let's drop down to the 5-minute chart and mark out a 5-minute low inside of the gap, or one in the gap. Okay, so it took out both of those. Oh no, I remember this because I got really annoyed that it didn't. The whole reason I didn't enter this trade, I remember this because it was yesterday, is that there wasn't an external SMT. Okay, but pretty much ideally on an A+ setup, NQ would have taken this, ES wouldn't have, so that creates an SMT divergence inside of a high time frame PD array. That's an external SMT inside of a high time frame PD array. That is a good setup for the model. But this episode, this video is just about SMTs, so I'm gonna leave it there. But sorry for sort of dragging on a little bit. I feel like every time I record one of these videos, I feel like I could have done it clearer and concise, because I'm going into these without a plan. I'm just telling you what I know, because I can talk about it for days. So if you found this rewarding, smash like, smash thumbs up. But we're going to make myself full screen. So yeah, pretty much, if you enjoyed, we got more of these to come. Sorry, I slacked on it yesterday. Tomorrow's will be going about the ins and outs of fair value gaps and how to use them. Actually, there won't be one tomorrow because I've got a very, very long day. Friday, there will be a video about fair value gaps. But if you're watching this in the future, then you don't need to worry because it will already be there. But for now, that is all. SMTs, to put it short, it's when one index takes the high, one index stays below. As long as they are correlating instruments, it is valid. So like USD JPY against USD GBP, or it's GBP USD, USD JPY, or GBP JPY. If you're trading like currency pairs, anything that's correlated, S&P 500 and NASDAQ, they are correlated. use those, because futures are all you're going to need. We explained futures briefly in the video before, but yeah, it's when an external SMT is on the higher time frame, an internal SMT is inside of the current trading leg. So yeah, hopefully you guys got some value from this video. If you didn't, smash like anyway. Okay, more of these to come. I'll probably do another one, because every time I finish one of these I sort of look back through it and go, that was a bit shit. I could have done more. I could have spoken about this, could have spoken about that. So next one will be scripted. I will have a plan, and it will be a lot more efficient. Cool. Love you all. Take care of yourself. Tell someone you love them. Stay profitable. And thank you for joining me on this journey. Watching these videos is the first step to changing your life. So thank you very much, and I'll see you later.